Hey everyone, my name's Andy. My channel's Finding Value. I'm somewhat redoing this clip for everyone because we have a lot of new subscribers and we've got questions on how do I maintain, not really focus, but how do I maintain the composure to hold on to my investments? Like what allows me to really hold on to the investments that I have through thick and thin? And I'm going to show you what I look at in the future to make it a lot easier to hold on to these investments. So what I call this is metals deficit. This is a lot of the metals that we're investing in, and this is why we're investing in them. So looking forward, I've got a copper long-term supply and demand chart in front of us. The numbers on the left, don't worry about that. Think of that as tons, but think of more of, this is a 3.5% demand growth trajectory. This is the demand. This is our supply here. And we're at 2020 right here. Notice how the demand is greater than the supply. And when that happens, prices are going to go higher. Now we have a lot of green revolution stuff coming. I call it green revolution, which is basically renewable energy. Renewable energy and electric vehicles and all this stuff use a lot of copper. So you can see this in the supply. The supply is going flat because the price isn't high enough for supply to grow. And the demand is vastly going to outstrip supply. I would say right in this right here is pretty big too, but ever since 2020 going forward, the supply is going to be in a deficit, and then a very larger and larger deficit as time goes on. So I look for the increasing deficits in a metal with time. This is why we're investing in copper related stocks, because of the increasing deficit with time. Next, I'm going to go over zinc. This is the market balance of zinc, big deficit, a little bit of a surplus right here, and then we go back into a deficit. So zinc looks good to invest in because of the deficits. Here is nickel. 2020 is right here. You can see that we're maybe a couple years out, and then nickel really blows up a gigantic supply demand gap. This is the demand and this is the supply here. Prices are going to go vastly higher, and we're going to need a lot more nickel in the future. So copper and nickel, they're both used in electric vehicles. Some very good investments. Here's the palladium market balance. And I just wanted to show you palladium has gone up a lot. We were in a big surplus back here, but now we're going in massive deficits. So we're in a market deficit. That's why palladium is so high. This is why I'm showing you the chart. I just wanted to show you that 2009 would have been a good time to buy. You just hold on to it, and then the price of palladium really ramped up over these years. That's what I expect with nickel, copper, and all these other materials with time, is when the deficits come, prices are going to go a lot higher, and the supply is going to be enticed to come back online if it's not online, or new supplies will have to be found. And keep in mind that this isn't very quick. New supplies take time to come to market, and prices can get pretty out of whack if supply doesn't come on quick enough to balance the market. Here's iron ore. You can see it was in a surplus, and then all of a sudden we're starting to go into a deficit here. That's why iron ore prices are going higher. Here's silver. Now I want you to look at above ground silver is in the green. Notice how this thing just falls off a cliff because the deficits between supply and demand are growing with time. We're just starting to enter a deficit, and that's why I think silver is an excellent investment opportunity, is because price is going to have to go higher for new supplies to come online. We just ate through all the inventory, and I expect silver prices to go far higher over time. Now, this stuff doesn't move in a straight line. You're gonna move up, it's gonna pull back, you're gonna move up, it's gonna pull back, and that's how markets kind of work. It just takes time. But I know that the deficits are there and they're increasing, and the demand way out in the future is exceptionally large for silver and all these other commodities. Here's rhodium. Rhodium's gone from $650, right here was $650 an ounce in 2016, all the way to $16,000 in 2020. I think that's 2020 right here, and it has increasing deficits. So rhodium would be a very good hold right now if you had rhodium. I'm just showing you the charts and what the deficits and market balances look like. Here's platinum market balance. We've got big deficits here, and we pulled out a deficit in 2020, and they expect another deficit in 2021. Platinum needs to go far higher than where it is today. It's just a matter of time. That's all it is. And I'm going to show you one cost curve because a lot of people haven't seen this. This is the South African platinum mines cost curve. I'm showing South Africa because they produce 80% of the platinum. This is the total production here, the cumulative production. This is price. These are the costs of these mines right here. Now, the lower, we'll call this the mid-tier in here. These are the cost, what it costs to produce, a mining company to produce platinum. It's about $800 right in here. We were below 800 for a while. So all of these guys were struggling. Some of them shut down, some are on care and maintenance, some of the mines. And what we're going to see is these mines are going to have to come back online to fix the deficits here. We're going to have to produce more. So prices are going to have to go higher for platinum. Here's the uranium supply demand. Obviously, we had a surplus here. We had Fukushima. I think it was somewhere in here. We had some problems where inventory went up. But look going forward, 2020 is right here. We're at the inflection point between surplus and deficit, and then the deficits grow quite rapidly into the future. I would expect prices to go much higher. So what I look for, this is some of the stuff that I look for, is I look for market deficits in the future, and then I invest in those companies that make or produce or gather, however you want to call it, those minerals. And when it goes into a deficit, prices go higher, and the valuations of those companies go higher, and the things that they sell obviously go up, and they make more profit. So I look for these types of charts for future demand, and I'm looking for future deficits in the minerals. Then I invest in those minerals that have deficits in the future, because prices will go higher to spark more supply to come online. It is that simple. Now, you have to tie this with real estate, because real estate's the inflationary tailwind behind it. Whenever those two things align, which we have alignment now, these are going to go way up, because you're going to have that inflationary push behind the commodities as well. So you're going to get a twofold demand. You're going to get demand not only from the demand side that's going to use this stuff, but you're also going to get the demand from investors piling in from a money rotation aspect behind it for an inflation hedge. So these are perfect timing, perfect valuation, perfect everything. That's why I like these companies these areas so much in the commodity sector, because it's very rare to get all of this aligned like it is today. So thanks for listening. Appreciate you guys. If you like the content, give me a thumbs up, subscribe, and thank you for listening. This is Finding Value.